Hi, I'm Neha Matthews, and you're listening to Three Things, the Indian Express news show. Yes Bank has been in trouble for a few years now. The Reserve Bank of India has been flagging concerns, and over the past few years, we've seen the top management of Yes Bank changing often. But now, finally, the RBI has stepped in. The central bank is working on a reconstruction scheme that suggested a clear possibility of the State Bank of India, India's largest bank, acquiring a 49% equity stake in the private sector lender. But for the first few days, with caps on withdrawals and cards not working, panic had started among Yes Bank account holders and investors. Here's what Finance Minister Nirmala Sitharaman had to say.
I want to also assure every depositor that their money shall be safe. Their monies are safe. I want to assure every depositor. I am constantly in touch with the Reserve Bank, and the steps that are taken in the interest of the depositors, the bank, and the economy. We are fully seized of the developments. So I repeat, the depositors can be assured that their money is safe.
Now, to understand why the Yes Bank crisis started and what moves the RBI is taking, we spoke to George Matthew, who covers the economy for Indian Express's Mumbai bureau.
Problems in Yes Bank started 2.5 years back. Bank lent funds to corporate borrowers. Borrowers were unable to repay the money. Most of them defaulted and delayed the repayment. So it affected the financial position of the bank. And then the bank didn't have enough capital to lend. And there was a major problem in the creditworthiness and the position of the bank. At that time, 3 years back, RBI also detected the problem in the banking sector and it initiated an asset quality review. During the asset quality review, they found a lot of discrepancies in lending, and the bank was forced to report many of the loans as non-performing assets. And the bank didn't have enough capital to lend to continue the operations. So then they were looking for fresh capital from investors, which the bank was unable to get the last 2 years. Then the bank's problem accelerated and there was a shortage of capital and they didn't have enough money to lend. And the money which they have lent, it was not coming back. Borrowers defaulted. So that was the problem. Yeah. Then the RBI stepped in and announced the moratorium and that put a lot of restrictions on the bank last week.
Can I just ask, with this risky behavior that you're talking about, was it also giving loans to, say, organizations that other banks were not giving loans to? Basically, very risky loans.
Many other banks also gave loans to many of these corporate borrowers. But the problem with Yes Bank was that it focused on these corporate borrowers. Majority of the lending was to these corporate borrowers, whereas other banks, their portfolio was diverse. Their retail borrowers were there, corporate borrowers were there, all kind of borrowers there. But here in Yes Bank, more than 65% of the lending was to corporate borrowers.
And now with the RBI stepping in, what sort of changes are they making to Yes Bank to avoid it going completely bust?
See, RBI stepped in and announced a moratorium that capped the withdrawals and put a restriction of 50,000 per depositor. And the RBI announced that it will come out with the resolution plan within 30 days. That means it will find a white knight to bail out the bank. And they came out with a reconstruction plan on Friday. It says State Bank of India is interested in taking up a stake and to bail out the bank.
And with this as well, the Yes Bank used to have very high priced stocks. Is this going to affect their stock price as well?
Yes Bank share price came crashing down. On the day the RBI announced the moratorium, it fell some 56%. So it came crashing down and investors were affected to that extent. Value of their holding came down. And even the investors like mutual funds and other lenders which invested their capital. That is what you call AT1 bank, additional tier 1 bonds. That is also getting affected because in the reconstruction plan, that will be written off. So mutual funds will face losses.
Like you mentioned, the stock price came crashing down, the share price. Is it reason for investors to worry about long-term investment in Yes Bank?
It came crashing down in the last 2-3 days, but share price always depends on the future earning potential and future of the bank. So if SBI comes in and invests in the bank and the bank RBI removes the restrictions on the withdrawals, maybe the bank will bounce back and it will be able to perform well in the coming weeks or months. And the share price can recover if the bank performs well under the SBI guidance.
Another cause for worry was account holders at Yes Bank. There was mass panic when they heard that there's going to be a cap on the withdrawal limits to 50,000. There was also problems with till Sunday they couldn't use their debit cards. Should account holders in Yes Bank be worried, or what steps should they be taking right now?
RBI and SBI and the government, all of them say that there is nothing to worry because their money is safe. With the SBI now stepping in and investing in the S Bank, and the RBI is saying confidently that within 30 days, bank will be out of the restrictions and the bank will run smoothly, then there should not be any worry on the part of depositors. Their money will be safe. Even otherwise, up to 1 lakh is insured with DICGC. So per depositor, 1 lakh will be that money amount is insured. So overall, I think depositors' money is safe. So there should not be any worry on that.
And we also heard about Mr. Rana Kapoor, who is the founder and CEO of Yes Bank. He's coming under the scanner. Apparently, he's been arrested for money laundering as well. What is his role in the Yes Bank crisis?
Rana Kapoor is the founder of Yes Bank. He was forced to exit from the bank 2 years back. RBI forced him to leave the bank because of his involvement in some of the shady transaction and mismanagement. So he was instrumental in giving loans to some of the shady companies and borrowers, which were not repaid. And it seems some of these borrowings involved the kickbacks and commissions, and which went to the co-founder Rana Kapoor. So his role is being investigated by Enforcement Directorate, and he is being questioned about his money laundering, about his role and how money is being taken out from the bank through dubious means.
On March 5th, the RBI imposed a cap of Rs 50,000 on withdrawals by Yes Bank depositors. A day later, Finance Minister Nirmala Sitharaman assured depositors that their money was safe. P. Vaidyanathan Iyer, who has written on the economy for more than 20 years, joins us to explain why this capping of withdrawals is a bad idea, especially when India is going through a prolonged economic slowdown.
See, banking actually, it's a very traditional and conventional way of preventing a run on the bank, right? When you cap withdrawals, you essentially, in India, banking works on the concept of fractional reserve banking, in the sense that a part of the money which anybody deposits with the bank, a part of it is used as a capital adequacy reserve, and rest of the money is lent out. So if you're depositing 100 rupees, the bank probably keeps 10 rupees as a capital adequacy reserve and lends 90 rupees outside. That's how banking is done. So this is basically called the fractional reserve banking concept. So the traditional way of preventing any run on a bank is that you cap withdrawals, because bank doesn't necessarily have all the money which people have deposited with it. If all the people come and demand it on a particular day, then the bank will never be able to fulfill that. Having said that, I think that's probably a very traditional way of preventing a run in the bank. Having said that, I think in India, typically we have had experience, specifically in 2008, when there was this, global financial crisis, and there was a scare on ICICI Bank, that there'll be a run on ICICI Bank. The financials of ICICI Bank were not looking very good, and people were queuing up at ATMs of ICICI Bank and withdrawing money. So what do? Basically, you try to infuse confidence amongst the depositors. And confidence is a big measure which assures depositors that your money is safe. So that assurance, if it comes from people who are at the helm of affairs, that your money is safe, I am taking care of your deposits, you don't have to panic. And you also say that if you want to come and take money, you take money out. It's okay, it's available, you can take as much money out as you have in the bank. So that sense of security, when you give it to your depositors, I think that depositors do not panic. But when you put a withdrawal cap, I think it is immediately you will find everybody queuing up before the ATMs and wanting to draw money out.
Do you think instead that the RBI should have, in this case, opened up the coffers a little bit and let people withdraw as much as they want?
Previously, I'm just giving you examples, like, say in the previous Punjab and Maharashtra cooperative bank case, there were very few customers who had, say, money over 1 crore of rupees in banks. But what eventually happens is, it is not those people alone who are lining up before the bank. So those who have got 2 lakh, 3 lakh, 4 lakh, 75,000. In the case of PMC Bank, we started with, if I'm not wrong, a withdrawal cap of some 10,000 rupees. Somebody who has 20,000 cannot take money out, his entire deposit out. So I think it is a very, very big consumer jolt if you say that I will not let you take out money more than 10,000 rupees or 20,000 rupees. So I imagine that people will look for signals, and by capping withdrawals, you only send a signal that, boss, we are not sure. We won't allow you to take your money out. And this also reduces the trust of the people in private sector banks. See, we have, over the last 20 years, we have come to live with private sector banks, right? We have had, private sector banks growing aggressively. Much of the retail lending is also happening by private sector banks. So when you say one of the biggest privates, the fifth largest private sector bank is not safe, and that is the signal you give by capping withdrawals, I think it's never a great idea.
And what do you imagine would happen? Because you're also seeing a prolonged economic slowdown. There has been reduced spending as well. How do you think this cap on withdrawals will kind of add to that problem?
You see, it is something which we'll have to see, because trust in private sector banks definitely takes a hit. To my sense that when that there are government owned banks, and much of, say, India's banking sector is public sector banks, right? 65 odd percentage of banking assets are with public sector banks, which are government owned banks. And these banks are also, we must not forget, that hugely laden with bad assets. The NPA levels are very high. We are still not seeing very clear signs of NPAs coming down of public sector banks. And they are not lending. So essentially, public sector banks are also banks because of their NPA problems. So essentially, much of the deposits would now go to, people will say that, okay, it's a government-owned bank, so I'll put all my money in government-owned banks, because at the end of the day, government gives me guarantee. So all people put money in public sector banks. That is one impact. And public sector banks are very, very wary of giving credit today. So, it only leads to further credit, slowdown. Offtake of credit will slow down. Second is, then private sector banks, if they have to attract deposits now in this scenario where, people have less faith in private sector banks, they'll have to increase their deposit rates. So on two sides, one, credit offtake becomes slower because, much of deposits would go to public sector banks who are, NPA laden and who are not really very enthused to give credit. And on the other side, private sector banks, which are giving credit, which are fueling a lot of retail credit, they will have to increase the cost of credit. So availability of credit and cost of credit, both those cases, you have an adverse impact by such a move. I'm talking about a long-term consumer behavior in this.
But you also mentioned something interesting in your article about how a few days before the RBI stepped in, we had a select few customers of Yes Bank coming in and withdrawing large sums of money. What does that indicate?
So, it is possible that people wanted to genuinely remove money from Yes Bank, and that the problems of Yes Bank are not known since March 5. Problems of Yes Bank are known for the last 2.5 years. Ever since, the RBI forcefully asked Rana Kapoor, who is the promoter of the bank, to step down. That happened way back in September 2018. since then, Yes Bank has been having problems. Over last 1.5 years, actually, many of the big, say, investors in Yes Bank who have invested in the stocks of Yes Bank have also exited. Rana Kapoor himself has exited over the last 1 year or so. So the problems of Yes Bank were not known. And it is possible that very, very savvy depositors kind of withdrew their money. So I'm sure that there are bank numbers available, which, Indian Express will do a story today or tomorrow of how, say, what kind of money was withdrawn from Yes Bank over the last 6 months between, say, September 2019 and March 2020. So those numbers between October 2019 and, say, February and 2020, I think those numbers are still not made public, but there is data available on withdrawals of deposits by customers over the last, say, over the previous 6 months. We have data to show that depositors have taken money out, and it is also possible that high value depositors have taken out money. And last couple of days we have had reports of 2-3 companies having just a day before or just 2 days before the moratorium and the super session of RBI board, people have one or two customers have taken money out. When suddenly there are large scale depositors taking money out, it just kind of leads to some suspicion. So which I think Yes Bank forensics would reveal in due course. So they should look whether whether there was a systemic reason for taking money out, or they took out money based on some inside information. Those are things which are very difficult to prove. But I'm saying it is good to know, because why should a depositor who has 1 lakh rupees, he can't withdraw his 1 lakh, but somebody who's got 164 crores, previous day he can withdraw all his 164 crores. Isn't that, I think that is very unfair on the smaller depositors. So that's why I think that this whole idea of capping withdrawals can be avoided, because if, say, RBI governor or the State Bank of India, which finally has said that it is going to take at least 26% equity or up to 49% equity in Yes Bank, if they too come out and say, you withdraw whatever money you want. Eventually, State Bank of India is a government-owned bank. It's a SBI Act is a separate act. It is completely sovereign in many ways. If it says that your deposits are safe, you don't have to worry, I'm willing to honor all your deposits, that is a statement of confidence on that you are eventually taking care of the depositors' interest. So I don't think depositors then flood the ATMs to take money out. I think people, if they were safe till yesterday when actually Yes Bank was in dire straits, and today when Yes Bank is has got a rescuer in the nature of the government itself and a state-owned bank itself, so why should people then queue up before the ATMs is the question that one needs to ask.
Late Saturday night, crisis hit Yes Bank announced that customers can now make withdrawals using their debit cards at any ATMs, days after the RBI superseded the board of directors of the troubled bank for a period of 30 days and capped deposit withdrawals. Early on Sunday, the Enforcement Directorate arrested Yes Bank founder Rana Kapoor under money laundering charges after he allegedly refused to cooperate in the probe. Kapoor's arrest at the ED office in Ballard Estate followed over 20 hours of questioning by the central agency after it raided his residence on Friday night. He will remain in custody till March 11th. The State Bank of India, which is set to buy up to 49% equity stake in the bank, as proposed in the RBI's reconstruction plan, said on Saturday that several potential investors have approached it to form a consortium to pick up stake in the private sector lender. The SBI will initially invest Rs 2,450 crores, but this investment can later increase to over Rs 10,000 crores, depending on the due diligence, final valuation, investor interest, and capital requirement, according to SBI Chairman Rajneesh Kumar. SBI has time till today to respond to the RBI on its Yes Bank draft scheme. Before we end, a quick coronavirus update. With 5 fresh cases being reported on Sunday morning, the total count in the country has climbed to 39. The Kerala government on Sunday warned of strict action, including prosecution, against those hiding overseas travel history in view of the 3 fresh coronavirus patients not disclosing their visit to Italy. The health department warning said failure to inform authorities would be considered a crime, as the state police separately said it was illegal and punishable to hide such information. Arunachal Pradesh, too, has stepped up its security measures and has banned foreigners from entering the state in view of the outbreak. Meanwhile, the Health Ministry has said that all cases in India are in stable condition and recovering slowly.
You were listening to Three Things by the Indian Express. Today's show, as always, was edited and mixed by our producer, Joshua Thomas. If you like the show, then do subscribe to us wherever you get your podcasts. You can also recommend the show to someone you think will like it. Share with a friend or someone in your family. It's the best way for people to get to know about us. You can also tweet us at Express Audio and write to us at podcasts@indianexpress.com.